MarketStrategy.com.
Hi, this is Chris again, looking at the upcoming Thursday, September 25th trading session in the financial markets. As you can see, we have the economic calendar in front of us now. And the first thing that I would say is really there are a lot of announcements coming out during the session. Only one that really matters as far as I see. This market is going to be fairly quiet all throughout Europe as far as economic announcements. Core durable goods orders do come out in the United States, 0.7%. Now, initial jobless claims can move the market, but I think this particular week is probably not going to have a massive effect. I think we've kind of set the tone for the US dollar in general and where people want to invest, and that's really, I think, as far as that number goes right now. So looking at this, I suspect that the core durable goods orders will be what moves the market the most. It'll have an effect on US indices and the US dollar too, to a lesser extent. Keep in mind that the dollar a lot of time is driven by what's going on in Europe, and what's going on in Europe right now isn't good. So there should still be a bid in the US dollar, unless of course we have some type of absolutely horrible miss in this number. The miss in this number, of course, could affect the stock markets, but more than likely that should only present some type of buying opportunity. Looking at this calendar, this is really the only thing I'm paying attention to as far as announcements are concerned, and beyond that, we'll be looking at technical analysis, which I'm getting to right now. First market I'm looking at is the S&P 500, and as you can see, I had suggested here recently that we were going to consolidate somewhere between 2020 and 1980 or so, and that appears to be the case. Good core durable goods number could push us back towards 2010. I think short-term call buying opportunities will exist on either a better than anticipated number or even a short-term pullback. As long as we don't break to a fresh new low, I don't see any reason to be overly concerned. That low is right around 1975 or so, which you can see is the top of these candles here, the solid body part. So we still are within this area, even though we may have overshot by a point or two. Looking over the NASDAQ, same story. Looks like we're just simply going to continue to consolidate. I'm calling this 4040 to 4120 with a upward bias, certainly. You could even make a little bit of an argument for basically hitting a trend line here recently. So any pullback should have plenty of support. 4040 is going to be an excellent buying opportunity as far as I can see, because if that doesn't hold, then some things have changed. But at this point in time, I think that we have support there, and then of course a major support at 4,000. I am only buying calls in this market. Interestingly enough, we do see the euro breaking down during the session on Wednesday, and we have gone below the 1.28 level for the first time. While this is a very negative turn of events, it's not enough to get me to start throwing money into the market. I need to see us break it by 50 pips. And the reason being, of course, is that it is such an important area. I want to see it really break down. Do I think it'll happen? Yes, I think it probably is going to happen. But I don't know if it's going to happen now or a week from now or whatever. And we may have to build up a little momentum in the meantime. So I would not be surprised to see us climb back to 128 by the end of the day, maybe pop a little bit, and then continue to dig away at the support, because again, based upon the longer term charts, this is a really supportive area. This is a big deal. This is 61.8% Fibonacci retracement of the entire move. In other words, if this gives way, we're probably going all the way down to about 120 again, given enough time. That's not going to be a quick move by any stretch of the imagination. Looking at the dollar Canadian dollar, I think core durable goods will have an effect on this market. During the session, we are forming a bit of a shooting star at 111, so it does suggest that we're going to pull back. I think 110 still offers support though, and as I draw a line across the chart at 110, you can you can see that it is an area that has mattered several times. So I think any pullback to here, more than likely, we'll see buying pressure, especially if that core durable goods number comes out better than anticipated. And of course, if we break the top of the shooting star, that's bullish as well. I still think we're heading to 112 given enough time, but this pair has a long history of chopping around. The two economies are so intertwined. With that, I've taken a look at the upcoming Thursday, September 25th trading session.